If anyone's looking for a place to rent in Miami, we have a 2-bedroom, 1-bathroom apartment here for $2,200 a month. There's the information in the building, guys. This could be your new home for only $2,200 a month. Right across the street at nice and beautiful Military Park. I'm gonna walk through there a little bit and check out this neighborhood. There is so much happening right now with real estate and the economy. It's almost hard to even keep up anymore, but it's good because it gives us a lot of stuff to talk about and keeps our minds working. It keeps us thinking about what might happen next. The first thing is mortgage demand. Everybody's been celebrating these past few weeks that mortgage rates are now in the low 6s, and we even saw the applications for people jumping back in saying, hey, I'm gonna go back out and buy now that rates are lower. We saw applications jump. Well, now, just this past week, even though rates are the lowest they've been in a long time, applications went back down again. And there's no way we can know for sure why this is happening. All we can do is speculate and just guess. Just in 1 week, they went down 7%, so that's pretty significant. And when you look at where they were at 1 year ago during the same week, mortgage applications are still down 80% year over year. So that is huge. That just goes to show you that at today's prices and even at a 6% interest rate, even if they get into the high fives, you know, some people think that, oh, later this year, you know, interest rates are going to settle around 5.5%, 5.6%. So what? Even if it does, and prices don't come down to the point where people can afford things, it's not going to matter, guys. I feel like it's not going to make that big of a difference when it comes to people just jumping in and going back out and looking to buy again. Because the main problem that everyone's facing right now is general affordability. And home prices have been too high for too long, and these interest rate hikes have made it even more unaffordable. And, you know, lowering it 1 point is not going to really help anyone when it comes to being able to afford an already expensive home. And many of you already know that that's basically my premise of why I believe home prices are going to continue to fall throughout the year, just because no one can afford homes at these prices. And that's why we've seen the amount of pending home sales fall and the amount of closed home sales falling and the median sale price falling and mortgage applications falling in general year over year. It's because affordability is still just too far out of whack. Until that gets resolved, I don't think you're going to see any major improvements in the housing market. But that's going to be good news for everyone who's out there looking to buy or has been patient on the sidelines, because everything is crazy right now. And to just show you guys the sign of the times and where things are looking right now in terms of real estate, I saw this fascinating story today about how many Miami real estate agents are quitting just in 1 year because, you know, the market has slowed down so much here. Now, home prices are still very expensive in Miami, but the amount of sales that we have closing here are dropping off a cliff just like everywhere else. When you have a ton of real estate agents and the amount of closed sales has basically been cut in half, there's not as many deals, there's not as much money to go around, so people are going to be quitting. And according to this report, the amount of active Miami real estate agents in the fourth quarter of 2022 fell by 36.3%. That's 1/3, guys. That is huge. That's a lot of people dropping out of the business right now. So the number of active agents, I didn't even see you there. Got another chicken there, rooster, I don't know, whatever you want to call them. So the amount of active agents in the Miami area went down to about 4,529 in the fourth quarter of 2022, and they lost 2,580 people year over year. And here's the interesting thing, because Miami has the largest realtor association in the entire country, meaning we have more licensed real estate agents here with the local MLS. And just to give you guys an idea of how crazy this is, our local MLS, the Miami Association of Realtors, says that they have about 55,000 licensed members, but according to this report, in the fourth quarter of 2022, only about 4,500 people are actually making money, guys. So that's not even 10%. So think about that for a minute. Not even 10% of the people that have a license with the Miami Association of Realtors are making money. And they define active real estate agents as somebody who closed a sale either as the listing agent or the buyer's agent at some point in the fourth quarter of 2022. So that's what they define an active agent. You had to have closed a deal at least once in the fourth quarter to be considered active in this. And when you look at a lot of real estate agents don't even close more than like 2 or 3 transactions a year. You can see how a lot of people might not even be counted in this. But to go from 55,000 licensed agents paying MLS dues every single year here and only 4,500 actually making money in the third quarter of last year, to me is astonishing. To me, this really just backs up how much real estate has been slowing down. And you know, here's the interesting thing with this. You know when the amount of active agents started to fall? Take a guess. Middle of 2022. That was the peak of the housing market. That's when everything started slowing down nationwide and here as well. And that's when you started seeing less and less people start making money. This is basically going to be the trend probably everywhere. I wouldn't be surprised if these figures and numbers match up in other places across the country as well. But it's funny because when you ask the Realtor Association about these things, they always come up with the same answers. They say things like, well, 2021 was an outlier year, so we can't really look at what happened in 2021 as, you know, something normal. So this is just a rebalancing of markets, you know, is what they call it, a rebalancing of markets. That's the funny term that they use for all of this, which is just another way for them to say, don't panic, everything's gonna be fine, and you should definitely go out and buy a house right now. But on the flip side, this is actually good news for real estate agents that are more seasoned and have experience and are able to survive these downturns, because when you get rid of all the one-hit wonder agents out there, it leaves more room for the real professionals to make the deals and still make a decent living. You know, a lot of times people will ask me in the comments, should I get my real estate license right now? Is it a good time to jump into real estate? Overall, guys, it's not. It's not a good time to jump into real estate because you're going to be competing with so many other people for far fewer sales than what we had before. But if you're in it for the long run and you know you can survive the next 2 or 3 years without worrying about, you know, how much money you're going to make, then sure. You know, I got my start in a down market and I got a ton of experience from it and I had nothing to lose. So for me, it was good. But people that think they're going to jump in and make 6 figures the first year because now you're a real estate agent, you know, good luck with that. When I see properties like this one, it's pretty much a guarantee that this seller is not serious because this person has literally been listing this house for sale on and off since 2021, consistently raising the price and never actually selling the property. So I call this more like going fishing than actually selling a house, because if they were really interested in selling and they were serious, they would have sold it by now. And you just see so much of this around here. And literally the surrounding houses are selling for like $700,000-800,000. They want $1.5 million for this place. Come on. By the way, I'm sure a lot of you probably already saw this and know this by now, but the Fed actually came out and raised the interest rates again by a 1/4 point, which is kind of what everybody thought was going to happen. But one thing that the investors didn't anticipate, just like they've been getting wrong time and time again, is they thought that, you know, this was probably going to be it, maybe one more hike, and then, you know, they're going to start lowering rates by the end of the year. And based on Jerome Powell's talk, that's seeming very unlikely, and that has investors worried. Turns out all these Wall Street bigwigs are kind of hoping for the best, but they're not preparing for the worst. Still have a lot of people trying to take advantage of what they think is still a hot housing market, but as we just discussed, that's no longer the case. We just saw the other one for sale right back there, and you literally have 2 more houses just down the street from that one, both for sale right next door to each other. And to me, all these people are just dreamers, because look at this. These houses are almost right next door to each other. They want $777K for this tiny house, 1,350 square feet. And look, across the street, sold for $770,000, 2,100 square feet. 790K, 2,300 square feet. Literally right behind them, 1,700 square feet, sold for 750K. And don't even get me started on this one next door. These guys are dreaming as well. It's another flip. They bought this place 2 years ago, January 2021, for $415, and now they think it's worth double at $950. I think we're gonna have to circle back on these and follow up, because this is just too juicy to not follow up on. The interesting thing with this Fed situation is that they're saying time and time again that, hey, you guys aren't listening to us. We're going to continue with the rate hikes as long as necessary until we get inflation under control. And also, we don't even have a terminal rate set yet, which is basically the rate that they're going to raise the rates to and keep it there. So they haven't even decided yet what that's going to be. So with this new increase, now the rates are at 4.75%. And they predicted last year that they would need to get at least until 5.25% at some point this year, and maybe that would be the terminal rate. But so far, they have not confirmed that. To me, that's kind of the problem with the whole system right now when it comes to real estate and the stock market and the overall economic outlook on things in general, is people are just being too optimistic of where things are headed, guys, because you have to understand something, that whenever the Fed decides to stop the interest rate hikes, and eventually whenever they start to lower them, it's not just because inflation is down. More likely what's probably going to happen is we're probably going to be in a recession, at least officially, and when they start cutting the rates, it means that, yeah, you know, we messed up. We raised the rates too much, we held them high for too long, now we're in a recession, and now we're going to start cutting rates. But by then, all the damage is already done, and you know, average recession lasts 18 months. So anybody who thinks that we're already in some kind of recovery mode, or the housing market has already reached bottom, or any of this other nonsense that you're hearing out there is just flat out wrong, because those narratives don't line up with what's actually happening when it comes to what we're seeing with home prices, what we're seeing with mortgage demand, what we're seeing with what the Fed is doing. Like, none of it adds up when you're trying to paint that rosy picture, unfortunately. Now, I saw this article today from a real estate investor of how they plan to move forward in 2023 when it comes to buying real estate, because obviously right now is a pretty terrible time to be investing in real estate as prices are coming down and rents are going down as well. And interest rates are very high, especially when you're purchasing an investment property, unless you're paying cash. A lot of times the interest rates today are so high that it basically eats away any type of return that you might have had from the property. So it makes real estate investing next to impossible in an environment like this, which is a good thing in terms of letting the housing market cool down. But if you make your living as a real estate investor, not so good. But the reason I'm bringing this up is not because I think a bunch of you are real estate investors, but what can we learn from what they're saying and doing that can actually help the average person. So listen to this. This guy says to stay away from any markets that have seen the highest price appreciation over the last few years. Instead, focus on regions that are more under the radar. And for this guy, his place that he's looking at investing in is southern New Jersey. But he says you got to stay away from markets like Phoenix, basically all of Florida, Austin, Texas, you know, Boise, Idaho, all these places that saw this massive run up in home prices, to steer clear if you're looking at investing in real estate. He says you want to look for markets where there's a healthy economy and the rent levels are supported by the area's median income. Who would have thought? By the way, in case you guys can't tell, this is one of the more affordable neighborhoods that you guys always ask me to walk through, as you can see by my surroundings here. And it's still ridiculously expensive. Now, another thing he says to look out for is you want to look in a market where rents have not gone up a lot in recent years. He says you need to be looking at investing in markets where the downside is very little and the rents haven't gone from 1,000 to 2,000 in just 1 year. Basically, anywhere you see where rents have, you know, doubled or tripled, stay away from these places. And according to him, some of the most stable markets are places like Philadelphia, Pennsylvania, Washington, D.C., Dallas, Texas. I have to kind of raise an eyebrow on that one. Dallas seems to be one of those pretty overheated places, but okay. and Boston, Massachusetts. And he also says that you want to look for properties where the rent is at minimum 1% of the purchase price. And as you can see from most of the places that we pass by here, that's nowhere near the case. So investing in real estate in Miami right now is generally a terrible idea. But here's where I think his advice gets a little bit insane. He says many investors aim for positive monthly cash flow, but that opportunity might come down the road when interest rates are lower. And if you're entering the market today, if the property at least breaks even with the high cost of financing, then you'll eventually have the opportunity to refinance further down the road. And to me, that's getting into danger territory, especially with real estate investing, because let's face it, every single year, your expenses to maintain that property go up. Maintenance costs go up. Utilities go up. Insurance goes up. Taxes go up. Everything goes up. And obviously you could say, well, maybe the rents do too, but you can't gouge your tenants, guys. You can't raise the rent every single year to unreasonable levels where people can't afford it. Otherwise, you're not going to have any tenants left. If you think you can always just pass on 100% of your expenses to the tenants, that's not how it goes. But like I said, what can the average person take away from this? What can be learned from this real estate investor's advice? And to me, a couple of the big takeaways are, number one, if you're serious about owning a home and you want to buy something this year, you don't want to wait for prices to come down significantly or anything like that, then the reality is you probably need to move. It probably means wherever you live right now is just out of your price range, and expecting it to be in your price range later this year is probably not very realistic. Even as prices come down, interest rates are still going to be high, which is still going to make affordability an issue. And not everybody wants to live in Philadelphia or the Midwest or any other places that are extremely affordable. That's the thing. People like to go where the jobs are. People like to go to the most desirable areas because these are like the cool and hip spots to live at, right? Also, I think in general, avoiding boom towns where housing prices have exploded is good advice as well, mainly because these areas are going to get hit the hardest when home prices really start coming down a lot. You're already seeing it in places like Austin and San Francisco and Boise and Phoenix. These places have already seen double-digit losses in the last 6 months. So that is a big loss in a short period of time, which is very atypical for real estate. And another thing to pay attention to as well, just like this guy said, is how much have rents gone up in your local area? Because one of the biggest dilemmas right now is people that are paying high amounts of rent, are looking at buying as a maybe alternative to it being cheaper, right? It might be cheaper to buy than it is to rent, depending on where you live. Although most places right now, it's the opposite. In fact, like 90% of the markets across the US, at this moment now, it's cheaper to rent than it is to buy, which is another signal that you might want to hang on, especially if you can save money renting and you see prices coming down in your market. I showed you guys in my previous video how to track your housing market and see what's going on with prices there. So make sure you do that and see where things are going to see if you should be looking at buying this year or not. And if I were a home buyer in 2023, not only would I be looking at all those things like I just told you guys, but I'd also be looking at how secure is my job if I had a regular job. Because we're seeing so many layoffs, and literally every single week, I always have a new report for you guys of which companies are the latest ones to announce layoffs. And the latest one is Rivian, the electric car company. They're going to be laying off 6% of their workforce. They have about 14,000 employees, like roughly 800 people they're probably going to lay off, something like that. And I told you guys this before, pay attention if you work for a company that's publicly traded, check their stock price. You should be following this because it seems like the stock prices going down is definitely basically a guarantee that your company will be doing layoffs at some point later this year if they haven't already. Because look at Rivian. They lost 90% of their value in the stock market last year. Sounds familiar, right? Redfin, Open Door, You know, the list goes on. I don't remember the rest of them, but there's a few right there related to real estate. But at the end of the day, I have no doubt that, you know, a good chunk of you guys who are looking to buy are gonna be responsible. You're gonna find the right house at the right deal. Just like one of my subscribers, David, I shared his story in a video the other day. And when you're diligent and when you're patient and you find the right property, even in 2023, you could still find something worth buying, guys. So I just want to make sure that everyone understands that I'm not anti-buyer, I'm not anti-anything. I just want people to be protected, and I don't want to see people lose their homes like we saw back in 2008, 2009 with this wave of foreclosures because people got in over their heads. And whether or not that was their fault, we can debate that all day long. But right now, this time, it's preventable, okay? So all you got to do is just be smart about this. Don't pay over asking price. Get your inspections done. Don't waive your contingencies. Ask the seller for concessions and contributions towards closing costs. Try to get a mortgage rate buy down. Try to do every single thing you possibly can to get the best deal on a home. And I think you'll be in good hands. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.